Good evening, all, and welcome to the fifth webinar of monthly webinar series organized by ISTD Indore chapter, in HRD and Indore chapter, and Sri Vaishnav Vidyapith Vishwavidyalay, Indore. I now invite Dr. George Thomas, Chairperson, ISTD Indore chapter, and Director, Sri Vaishnav Institute of Management, to please give the welcome address.
Thank you, Dr. Anu. It's a proud privilege to have Mr. Tahilramaney on board and giving consent for delivering lecture at ISTD Indore chapter. I'm very happy to share this that ISTD Indore chapter is under the leadership of Honorable Vice Chancellor Dr. Upinder Dhar is doing so many activities. I would like to brief you about the ISTD Indore chapter also. If you might have heard about ISTD established in the year 1970. It's a national level professional body engaged in training and development activities. It has a very popular diploma course also, which is the only diploma course approved by Government of India. And it has more than 8,500 members all across the country with 44 plus chapters fully functional. And as far as ISTD Indore chapter is concerned, it was established in the year 1999 by Honorable Vice Chancellor, the then Director of Prestige Institute of Management Research, Dr. Upinder Dhar. Under his able leadership, since 1999, many activities have been conducted, and twice ISTD Indore chapter got the Best Chapter Award also. And we have a great contribution of Dr. D.T. Manwani. He also revived ISTD Indore chapter because Dhar sir left Indore after Prestige and shifted to some other assignment. After coming back, Dr. Dhar requested Dr. Manwani to kindly take care of ISTD Indore chapter, and Dr. Manwani was so kind, and with his quantile growth, ISTD Indore chapter also grown manifold. And since then, he has conducted many MDP. Today, under his guidance, Dr. Manwani's guidance, I think 39th MDP we have conducted. So continuously every month we are conducting MDP, which makes ISTD Indore chapter outstand across all 44 chapters. None of the chapters has conducted such MDPs on a continuous basis, which makes us very proud. And I also take this opportunity to say that as chairperson Indore chapter, my team, energetic team, since the time we have taken over, under the leadership of Dr. Upinder Dhar and guidance of Dr. D.T. Manwani and Dr. Santosh Dhar, we are conducting so many activities. This webinar is also one of the activities that we conduct every month. Then we have student development program also. That is also one vertical very recently we started, and we are getting a good response from student part also. And very recently, I would like to apprise you that we have initiated a skill development cell, under which we are now engaged with the sessions of India, Madhya Pradesh, ITI schools, ITI colleges. So recently, last month, we conducted the first session with ITI girls students. We imparted the soft skill training, which is now going to pick up further. We have the vision to conduct multiple sessions with all across the ITIs of first Madhya Pradesh, then across India. So ISTD Indore chapter is now initiating many new things, which will help, developing and contributing in the training and development area. And it is all possible because of the energetic team managing committee we have, and the great guidance and uh, support from Dr. Upinder Dhar. And with this, I would rest my speech. And over to you, Dr. Anu. Once again, I thank you, Tahilramaney ji, for gracing the occasion. Thank you.
Thank you, sir. I now have the privilege to give a brief introduction about our resource person today, Mr. Sandeep Tahilramaney. He is a certified financial planner for FPSB, which is Financial Planning Standard Board, one of the highest global certifications in personal finance. He's a dynamic professional with nearly 3 decades of extensive experience in various industries like financial planning, education, and automobile, equipped with a lot many certifications and credentials. He's an author of an upcoming book, Money Rules in the Game of Investments. His training specialities include advanced Excel, financial mathematics, Excel based calculators and templates, IAP, which is Investor Awareness Programs, continuing professional education, CPE, financial planning, wealth management, behavioral finance, risk profiling, inflation, asset allocation, and retirement planning. His academic qualifications include MBA in finance, PGDIM, and BE in production. The certifications he has include certified financial planner, PFRDA retirement advisor, NISM MF distributor AMFI, IRDA corporate agent, NIA insurance broker. He has also a very vast experience, but to summarize it, he has been in financial planning organization for 12 years with Indra Securities Private Limited, Fingin Wealth LLP, financial planning and wealth management services, insurance, investment, retirement, tax, and succession planning. In the area of education institutes, he has given his efforts for 4 years in Altius Institute of Universal Studies for training, content development, business development, and administration. And in the automobile industry, he has spent 14 years with Gajra Bevel Gears Limited, Kinetic Honda Motors Limited, Kinetic Engineering Limited, Adroit Industries Private Limited, Signet Industries Limited, MIS in the fields of MIS, purchase, vendor development, materials, production planning, control, PPC, and audit. The key clients he has trained are many again, including NSE, BSE, IMA, CBSC, Gabriel India, Eicher, Volvo, Cummins India, Bio Urja, Jaipuria Institute of Management, NHDC, Lupin, Man Aluminium. So this was in brief, a very great personality. I have a honor to introduce sir. And now I hand over the session to Mr. Tahilramaney. Sir, please.
Thank you, ma'am. This was a too wide introduction. I don't deserve that. Anyway, thanks all participants. It's my honor to be here. In fact, I rarely get a chance to address a community who belong to the teaching profession. Are you able to see the screen? Ma'am, can you see the screen?
Yes, sir. Yes, sir.
Okay. Also, change in the slides. That's perfectly fine.
Yes, sir.
Okay, because I'm only able to see my PPT, not all of you. So when we discuss about the finance, personal finance, whether you call it money management or investment or whatever kind of planning, it's more or less same thing. We can categorize the people in a two category. One who are very keen, interested, like to learn more about the personal finance, and another category where majority of the people fall into, they not at all interested in personal finance, money management, and taking care of own finances. Now, understand one thing, whether you like it or not, money management is very, very important. 99% we focus on earnings, hardly 1% we give for managing the money. We should also understand that after some period of time, our active income will stop and we have to be on our passive income. So it's very important that we start managing our money. At least we be aware with our own savings and investments. Now, in case if either of the couple do not like to manage their own money, they can always teach their children, new generation, to be aware. So getting outsourced to some broker or advisor or kind of the agent for the mutual fund, for shares or for the uh, mutual funds, that is one thing. But be aware where you are investing, how the tax is taking care, what are the other aspects of the financial planning. One should be always be financially literate. That's more important. So in today's, because of the time constraint, I will keep my speed on a bit fast. Now, परिवर्तन संसार का नियम है. This we the God told us 5,000 years back, and this we all learned since our childhood. But even then, we are reluctant to change. We do not admire the changes. Changes always be there and is going to be happen. Now we always had two choices. Either we welcome the changes and prepare well in advance and change with a happy mood, enjoyment, excitement. If you remember Three Idiots movie, आमिर खान फेमस डॉलर, कि जब हम कॉलेज जाते हैं तो हम इस इंटेंशन से नहीं जाते कि क्या सीखा हमने, बहुत मजा आएगा. We always discourage the changes. So we prefer to be in our comfortable cage. At subconscious level, we are not more different from the animals. And another option, when the change forces us, it become mandatory. At 11th hour, we forcefully change, do or die situation. And then we have to undergo with the kind of suffering, pain, anxiety, uncertainty. And majority of the people fall in this second category. So always welcome the change. Whatever happens is always good for us. And if the change is not for the beneficial or some more innovation come, the older changes always get vanished with a period of time. So before mobile, we have a pager. Before email, we have telex. So most of the youth might not be aware with the what telex was. So always welcome the changes is always for the good, and never ever procrastinate. Number one, be flexible enough and don't try to be perfectionist. So whenever we come out of our zone, comfort zone, it's always a new area. We can't be master in days or in month or years. So whatever you learn, always start practicing. That's more important. Never ever focus to be procrastinate. Let me ask you, if we talk about the Bollywood, who is the perfectionist? We name Amir Khan, Kamal Hassan, Hrithik Roshan also try to be perfectionist. If we compare between Shah Rukh Khan and Hrithik Roshan, who is a better dancer? I'm not able to see your chat, so I guess Hrithik Roshan. If personality wise, six pack, body wise, again Hrithik Roshan. Who is more handsome? Hrithik Roshan. Why Hrithik Roshan is advantage? He has 3 thumbs and Shah Rukh has only 2. No. So let me ask you, पैसा कौन ज्यादा कमाता है? Who earns more money? Shah Rukh Khan. And why? Because he's more flexible. Hrithik Roshan is rigid. because he tried to be perfectionist. But Shah Rukh, on the other way, is more adaptable, flexible. You invite Shah Rukh Khan in your marriage party, pay him 5 crore rupees, he will come and dance with you. But rigid Ritik will refuse. So I'm not saying who is right or wrong, what is ethically right or wrong. I'm not discussing it at all. What I'm trying to say, be flexible and never try to be perfectionist. Whatever comes to us, always try to learn something new. This rule apply in every area of our life, whether career, business, our finances, investment, every area. The businesses who are able to adopt new technology, who are more flexible, survived. Same with the individual. I hope the message is clear to you. Now, when we see demographic age group in India basis, so out of the 140 crores, 1.4 billion population, 60% are major and 40% belong to the minor category. India is a young country compared to the other developed country. Our median age is 29 years compared to the China, which is 35 years, Japan 48 years. So if we see 80% people population belong to the below 40 years. 80%, huge amount. Now, it is always said there is a generation gap between the father and son. So it's not a one generation gap, it's two generation gap. Why so? In every 15 years, the generation get changed. And because marriage are taking late, so is the birth of the child. So by the time couple become parents, they are already 30 plus. So there is always a difference of two generation in a between the child and the parents, and so is the difference of their habits, their lifestyle, their liking, disliking, everything. So it's very difficult for the old generation to cope up with the new generation on various matter. Although this new generation is very smart, much more smarter than what we used to be in their age when we were a child. And this generation altogether had different liking and disliking. The main game changer in this generation is the generation Y. This belongs to the 35% of the total population, also known as the millennials. These are a huge vote bank, irrespective of the community, caste, religion they belong to. No political party can ignore them. And at the same time, they belong to the age group of 25 to 40 years. They have purchasing power, they are started earning. So there is a huge demand on their side, as well as the forthcoming generation, which belong to the 45%. Majority of them are minors, but after 10 years, they also become major, most of them. So we have a huge advantage as far as the youth is concerned, as well as this generation is very keen. They are educated, literate, and they have their own kind of the, you can say, universe. They are totally detached. Detached means not in a spiritual or Buddha way. They are very much attached to the all materialistic thing. Detached means on a relationship or relation kind of a thing. So India is going, next 30 years for India is very, very full kind of the fulfillment or very fruitful. What we have seen in China last 30 years, the same thing is going to happen in India in next 3 decades. Now, what actually happened in last 1.5 year before pandemic and currently, till we hit the first case in February 2020, before that market was trading at all-time high, Sensex Nifty, 42,000. The moment we got to come about this corona, all this pandemic, market crash 40% down in a 1 month time. And then after over a period of time, it started giving a V-shaped recovery. So this pandemic was unprecedented. So is the recovery also not anyone thought about. And now currently market is all-time high, much above than the 42,000 level. Now touched 59,000 in Sensex term. So if you look at the other asset class, gold, silver, everything, every asset class has performed, including real estate. Although that point in time, March 2020, it was like that it's the end of the entire world. Nobody is going to survive, but thereafter situation improved. Of course, there was a wave one, wave two, but despite that, all asset classes now started performing. And the clear winner is on the crypto side, Bitcoin. So it was a $7,500. Crashed to 6,000. Now again went to the $64,000 per unit, and again crashed back to 27,000. Now currently is $50,000. So who has participated more in this asset classes? This generation Y, which I told you, this is 35%. Not all of them, some of them, which were sleeping earlier, and they have started participating. If we look at the demat account details in till 2020, we had a $40 million accounts, that is a 4 crores till now. In last 20 years, we have reached to the 4 crores. And if you see the number of opening every year, which is on right hand side, so in 2020 financial year, only 5 crores got opened. But in last 1 year, 1.4 crores new account opening, and total account, demat account as of now, 55 million. That is 5.5 crore. This is huge. So if you see number of account opening in last 10, 12 years, this is how it's looked like. This is a fresh account opening each year. Now, if you see, till 2020, although we had a 4 crores account, demat account, 75% was inactive accounts. What do you mean by inactive? There is no buying, selling. So there is no trading in your demat account. And also after 1 year, you have not paid any kind of the MC fees. So account get deactivated. So 75%, there is a 4 crore of 75%, only 1 crore was active. Now this last 1 year, we have opened 1.4. So we can safely assume as of now, 2.5 crore is active, which is very, very less. If you see the total population, and within that 60% is a major. So this come out to 84 crore. 84 crores were major, only 2.5 crores account is active. Although minor can also open, but just ignore minor as of now. And on a global map, because we have touched the all-time high 59,000 success level, so we are amongst top 6 countries on a market cap basis. Even though our contribution to the entire globe is hardly 3%, not even a 3%, compared to the US and China, which is a 43% and 10%. So a lot, huge distance we have to cover going ahead. As far as the population is concerned, only 3% of the entire population of 1.4 billion, 3% participate in direct equity. And if we consider indirect investment through the mutual fund, PMS, then insurance, ULIP plan, then other kind of the NPS kind of a thing, the total participation is not more than 7% compared to the 50% in the 55% in the US. So why this happened in the last 1 year? Because of the many reasons. One could be market crash suddenly, and then they start recovering. So whenever there is something volatile, is always attract the attention. And the youth who are suffering from the kind of the pain of the job losses, they have much more time. Also, people started working from the home. Again, they got a much more time. And all the things are now digitally available. At the same time, a lot of apps are also user friendly. Lot many have waived all the brokerages even. So this all things attracted the attention of the youth, and they started taking the participant in the direct equity. But still, we are below 7% in overall. So why we are still struggling compared to the developed country? One main reason, financial literacy is still very, very poor, because we are not taught money management, personal finance at the school level or academic level. And people somehow, because of lack of knowledge, people somehow fear of loss of their money. People afraid. Then we lack in patience and trust. We always prefer equity when it's trade at the high, rather than when it's corrected and available very cheap. So most of the people comfortable buying equity at the high and sell at the low. And that is how we make the losses. This is a truth with the only equity, not with the gold, not with the real estate, not any. We never purchase gold at 100 and sell at 80 with the real estate also. But we always, most of us purchase at 100, sell at 80, 70, like that. So we are not actually investor. We are basically trader, speculator. And most of the participants who have entered, they are inexperienced. They are new, because they have joined the rally, because there is a suddenly one-sided, unprecedented kind of the rally which we have seen long, long back, 2003 to 2007. This kind of the rally is now happening. But these people are not aware with the kind of the deep correction. In last 20 years in my finance line, I have seen more than 10 major corrections. And where the correction happens, it just sucks the blood from our nerves. So we should always prepare for the worst as well. So the major question is that whatever happened, happened. Now what lies ahead in front of us? So India is a great story for another 3 decades. It's not only 1 decade, 2 decades like that. But we talk about the investment as far as the long term. When I say my investors invest for the 10-year, 20-year, people resist. They always look for the short-term profits. So when we talk about the equity, I always prefer to be on a long term. Of course, if you want to trade, there is nothing wrong, but you should be equipped with that kind of knowledge. So you should be technically qualified if you want to be trader. And if you want to be in a direct equity, you should know how to analyze the stocks. So you should be acquainted with the fundamental courses. Learn, then start participating. Otherwise, mutual fund is always a better way to go indirectly. Now, India is full of the opportunities. Sectors keep on changing. So I'm not advising any particular sector. They keep on rotating every month, every year. So do your own research. But what we've seen, the digital India, changing the technology, women empowerment, again, the new women also started participating in the equity market. This is a huge development. Youth power, middle class lifestyle are also upgrading. So this story is not going to end very soon. Now, despite the fact, Indian market in last 20 years, 2 decades was extremely good. I've seen from 2008 level, 2800, 3000 Sensex level to 60,000, 59,000 in last 20 years. Again, we are going to cover much more. But India is not only the performer, despite all this uniqueness. Although you can ignore Europe market altogether, even skip the China, but you can't ignore US market. So if we see last 12 years, India, the topmost is all performer and bottom is laggards. So India is not always the top performer across the globe. In top last 12 years, we can see India as well as US. So always diversify your portfolio within the India as well as US equities. You can't ignore US equities. This is a much bigger platform. And I said 50% contribution is of the US in a global equity. So now through NSE BSE, you can also participate, not NSE BSE, I think ICX, this is a new platform. Otherwise, you can always better because we don't understand our own Indian equity. How can you study the foreign equity? We can't give that much time. Always go with the mutual fund route if you want to participate in a global equity, especially US. So never ever board with the single asset class. Always choose the diversify your portfolio within various asset class. Now, what is the problem if you choose a single asset class? Whenever we stand in a queue, whether it's bank queue or toll tax queue, we see the line beside us move faster. This is Murphy law. So if you are purchased only gold, you can visualize that gold is not moving, all other classes start moving up. You're only with the real estate. So you can see real estate is not moving, all the other classes are start performing. And you're in equity. Equity will not move, other classes all started moving. So this is how it's work. Always diversify yourself. Now start with the basic thumb rule. Only think about the investment when you have positive cash flow at the end of the day. Never ever leverage. So if you are able to save, then only think about the investing. So on the one hand, you are loaded with a lot of the loans, EMI, leverage with the personal loan kind of thing, credit card debt. And on the one hand, you are investing, it's not going to give you profit. So there should be positive saving. And the rule says 50, 20, 30. What that means, 50% should go out of the 100 you are earning, 50 rupees should go in the mandatory expenses, like EMI, your grocery costs. 20% should be your kind of the traveling or kind of the your desire, aspiration. And remaining 30% should be mandatory in saving mode. Investments. Now you say 30% is a huge amount. I'm not able to save 20%. I'm not able to save even 10%. Some will come, I'm not able to save even as 1%. So always find out the leakages where you are, what are your unwanted leakages. Try to stop that. Start with 1%. 1% is quite manageable. Start with 1% saving per month, increase 1% every month. That is the only way you can start accumulating 20 to 30% over a period of time. Another thing, stick to the basic. So protection is always there, is create the foundation of our all investment, taxation, or whatever you say. Just like in building, we pay more emphasis on the foundation. The more solid the base foundation, we can high rise the building. But in investment, we always ignore the protection. Protection means insurance, protecting your future cash flow. In case if you are the bread earner, think about the moment if you are not around, who will going to feed your family? And we have seen in last 1 year, people suffered a lot through medical bills, loss of the lives, become in this black fungus, become permanently disabled. This we need to protect. So if we survive till the end, 60, 70, 80, we don't know what is our life expectancy. We can go up to 100. For that, your wealth investment will help you. But suppose I'm going to die today, tomorrow, the protection, the insurance company will going to help me. So these are not either or, these are both protection as well as creation. Thereafter comes the taxation. Most of the employed people only focus on the taxation point of view. They only restrict that somehow they are able to save the maximum, take the benefit of the ATC, ATT. There's nothing wrong in that. But understand, if you're taking the care of your protection and creation, taxation will automatically involved in that. Only you have to just fine tune and adjust. And thereafter is succession, that is the making of the will and testament. Because of time constraint, I'm not going to go deep into each and everything. When we talk about the insurance, there is a 5 different kind of insurance: term plan, there is life insurance, then health, medical, then critical illness, personal accident, and you can also take the social security. This is a Pradhan Mantri Jivan Jyoti Jivan Bima Yojana. However, the maximum cap under that is 4 lakhs only. The yearly premium is hardly 342 per annum. So is you can get it, you can Google it, you can get it. And also creating a contagious fund is your own created insurance, putting a 1 year expenses in a liquid form. I'm not going through much detail. And when we talk of the wealth creation, there is a 8 step process. But unfortunately, we go straight away to 6 number, choosing the policy or getting into the stocks or taking the mutual fund scheme directly. We have to follow entire process. Then only it will help. Now understand, we have different 6 classes to invest, and every class has their own nature, pros and cons. We should understand before making the investment. So cash is always for the short-term money management. Debt is for the stability. That means bonds, debentures. Then gold also provide hedge against the inflation. Then the insurance, which is a hidden asset class, but is always become visible when the person who is taking the insurance become invisible forever. Then real estate, equally important, and last one is the equity. So we have to always diversify among all asset class. And if we see most of the people, in fact, 57% of the investment corpus in India goes in the FD. But we should understand also that FD rates are keep on declining in last 3 decades. So you can easily, every 1 decade, there's a 3% fall. So never ever take your long-term goal with fixed deposit or a small saving scheme. You have to be on some portion with mutual fund or with equity, if you understand that direct equity. So how you can put all the asset class on risk return parameter? The lowest is the cash, then debt, bonds, debentures, then gold, then real estate and equity. The new emergent is the crypto market, of course. So this is how you can create. I'm not advising to be on the crypto side, but with the equity, cash to equity, and of course, including the insurance should be there in your portfolio. Now, when talk about the new emergent of the crypto market, Bitcoin and altcoin, if we compare with the mutual fund, what happened actually? Mutual fund with us in last 55 years. The first scheme came in 1964. That is a UTI 64, and that crashed down in 2000, 2001. But private player in the mutual fund, they started in somewhere in 1993, much before the SEBI. And thereafter, if we see the growth of the mutual fund AUM, how much money invested in mutual fund in last 10 years, the AUM, asset under management, was 7 trillion in rupees term, which now $36 trillion, 5 times rise in the last 10 years on the mutual fund side. That's include debt, equity, gold, everything, also international equity. But on crypto side, what happened? In last 10 years, the corpus under the market cap of the crypto was 0.0017 trillion dollar. Now, in till last 2020, it gone 10 times, sorry, 100 times, and now it's again more than 10 times. So now you can see this is a 2.5 trillion dollar, whereas the mutual fund in rupees terms, 36, if you want to convert it in dollar, 36 divided by 74, so we get only 0.5 trillion dollar. So how this segment have taken a sudden growth is totally on a speculation side, of course. Now, when we talk about the estate planning, succession planning, so there is altogether a different module which I can take for 1 hour. So I have to sum up in short. Always try to make a will. Nomination hold gold on the financial asset side, but will, if you have real estate property, go with the will. Nomination will not hold under the real estate. So always understand the difference between the nomination and will. Nomination from the legal point of view, only a caretaker is not a legal here. Okay. So will is always precede over the nomination. On a financial literacy side, we have 140 crore population. 75% is known as a financial literate. And what do you mean by financial literate? They are not educated. Financial literate means, as per the government terms, they can write their name. Instead of putting the thumb, they can write name is financially literate. Sorry, literate. Right. So there is a difference between literate person and educated person. But when talk about the financial literacy, is 60% is a measure, that is 84 crores. And when talk about the financial literacy, is only 24% of the measure population. That's come out to be hardly 20 crores. So out of the 140 crores, we have only 20 crore people financially literate, and among them 10 crore people participate in equity, mutual fund, and all kind of this market link instrument. So we have to increase the financial literacy, and this is not an India problem, it's a global problem. If we see, China is not much better. Financial literacy, we have 24, China is hardly 30%, America 50%. So across globe, in fact, America, Russia, and Australia has made it mandatory financial literacy in their syllabus in school level. On the other hand, UK, India, which have very good education system, even though we not initiated, made it mandatory. Of course, SEBI and NSE are taking their steps to infuse the financial literacy. But as of now, it's not mandatory. And that is why our behavior with respect to the equity is totally different. Market provide the return, so is the stocks, but investor don't get the return, or always lesser return compared to the market. Why so? Because we are not able to hold till the end. We lose on the conviction side, we lose the patience. So we behave differently when we talk about the equity. We are not taking our decision always based on the emotion. We panic in time of the crisis, and we always follow the herd mentality. So always seek the help whenever you have problem. Always find some mentor, advisor who can help you to achieve your. So finally, I sum up the entire session. Now it's time for the action. You have gone through all this presentation. It's like a satsang, unless until you take the concrete action. Because I'm not able to see your chair. So what action you have to take now, going ahead, after whatever you learned in past 30 minutes? So first thing first, self-development. Spend some amount every month on your personal growth, whether it's 2%, 3%, lot of online courses. Admire the changes. Do invest on your self-development. Get that knowledge. Second, learn the digitalize, better to be digitalized, learn all the new techniques, tools available, irrespective of the age. We can't say I'm the old and I can't learn. I learned advanced Excel at the age of 40 and I teach to the corporate. So learning is a continual process. So is the changes. And third thing, create the multiple source of the income. Our active income will stop over a period of time. So whatever the personal growth we are taking, you can start creating the multiple source. One of the is passive income through investment. Other, you can go involved with your hobbies or passion, and over a period of time, you can also start earning through that. Fourth, give importance to the fitness. Health is wealth, we all know. Not maintaining your physique. We don't want to be a six pack, but some amount of time for physical health is equally important. No amount of your insurance or your wealth can take away your suffering. Pain is always ours. So wealth is always there, insurance is always there to help you in time of the crisis. But if we take ourselves healthy, it's always important. Now, take your money management in proper way. We learned the rule 50, 20, 30, and protection in there is a 5 things I told you. Because of shortage, I not go in time shortage, I not go deep into that. And thereafter, protection, there is a wealth creation. Try to create a legacy for the next generation as well. Different source of income through investment. Then succession planning, making of the will. If you think you have asset, go with the will. Irrespective of age, we are young or old, make the will. Then finally, visualization and affirmation, because we have not learned the financial literacy at our childhood at a school level. So where subconscious mind is now very much rigid. So we to change our subconscious level. So for that, you can visit to YouTube. Always learn about the money visualization and affirmation. That will really help. So it's all about the how we take action. Our future will depend on what action we are taking now, and our present is totally what action we have taken in the past. So it's all chain system. It's not any action is not in isolation. Is always create a chain. So always aware that. And this is about my forthcoming book. If you are like the to be much more on the financial literacy side, just go through with this book. It will be live after a month time, physical as well as in Kindle form. And even if you don't like financial literacy or kind of thing, even then you can read some of the chapters. There's a 75 different concept we never learn to know since our childhood. So it will help you. So this was my side. Of course, you can subscribe to my Facebook page, and as well as you can join financial personal finance WhatsApp group if you want to get yourself aware. So thanks for joining this session. This is from my side. I am very much honored to be here, and I'm open for the question and answer session. Over to you, Preeti.
Thank you, sir. It was very, very informative, and especially the last few points were extremely helpful. Uh, I mean, I should actually put them as reminders every time, like on a monthly basis. I should try to remind myself about these 6, 7 points that you've shared. Uh, the chat box has many positive remarks. It was a very informative session. Dr. Dipali Saxena has written, Dr. Mehta has written really very informative session. Uh, Arijit Patel. Very important session and very helpful. I now request the participants if they can ask any questions or if they have any queries to further benefit from sir's guidance.
Yeah, good evening, all. I have one small question.
Yes, sir.
You told about the rule of 50, 20, 30. First question is paying EMI for the house or real estate. This falls under which category? 50, 20, 30.
Sir, this is a mandatory expenses, so this fall under the 50%. 50% is the mandatory, right? So within that, again, I have not bifurcated because of the time constraint. Your total EMI, whether it is a house loan or your car EMI, should not be more than 30%. So if you are earning 100 rupees, for example, 50% should go in a mandatory expenses. Within this 50 rupees, 30 rupees should be on towards the EMI. That is good. All kind of the EMI, house, car, avoid personal loan or any kind of this high and debt. So car and home loan is usually people are taking. So this should be 30%.
It means paying EMI is not an investment. Housing EMI, I'm not saying about car EMI. I'm just saying about the
Right.
housing EMI. So if I have
No. This is not at all investment. Basically, what you are paying EMI, this contain a portion of your principal as well as interest. So what actually happening in 20-year time period? Suppose you have bought a house 50 lakhs rupees. So after 20 years, you are paying 50 lakhs as a principal as well as more than 50 lakhs as an interest. So till you are paying off your entire EMI, you are not the legally owner of your house. So house is not treated as an investment. Understand that. EMI is always considered a debt.
Okay, thank you, sir. Second question is, you focused on will. You should have a will. What's the logic behind that?
Yeah, basically will is entirely different module, and I can take another session if you want. What we do actually, we make the nominations, right? So will is the making of the will and testament, wasiyatnama. So
Yeah.
will legally will always precede over nomination. So what we do under nomination, from a legal point of view, nomination is only caretaker. They are not a legal here. So suppose you make the will and you nominate to some other person, and in a will there is some other person in the will. So will is always precede over the nomination from the legal point of view, right? But there should not be any conflict between the nomination and will. In all financial instrument, there is an option of making the nomination or making the joint account. So always prefer to be in joint with your spouse if you are making the FDs or mutual fund. Demat account, you can go with the solo name followed with the nomination, and PPF is always a solo name followed with the nomination. Insurance solo followed with the nomination. But at the same time, if you had real estate, try to create your will, including your financial instrument. Also mention that financial instrument, you want to give this portion to your spouse, this one to your child, and whatever you wish to contribute in that allocation, right? So will is equally important. In fact, both are important, nomination as well as will. And you can create your own will with your own, or always take the help of the lawyer. They will charge hardly 5,000 to 10,000 rupees, maximum 15,000. But if you have asset more than 1 crore rupees, always create the will. And we have seen a large many corporate, whether you talk of the Birla, Reliance, they forget about this corporate. We individual fight in the court for 30 years, 40 years for the claiming the assets. So with the will, we can always remove this dispute when once we are not around. So it's our moral responsibility to pass on our whatever the asset we have acquired to pass on to the next generation.
Thank you.
Thank you, sir. We have a question from Gunjali Trivedi Rathore, ma'am. Is cryptocurrency a good investment and how safe is it?
Well, ma'am, Crypto is a new avatar, no doubt about that. And again, this is a different module, so there's a lot, many things to talk about the crypto. So first thing, understand one thing. Crypto is going and crypto is dependent on the blockchain technology. So you can search on the Google what is a blockchain and crypto all about. So this blockchain technology, this is a new emergent in the technology where the B2B system, when I have to transfer the money, right? So I have to take the some intermediary, whether it's a bank or Paytm. Whereas in crypto, you can transfer directly to someone account without the intervention of the some intermediate agency. Now, this technology is going to survive. There is no doubt. So is the crypto, right? But if your question is related with the price, what we have seen in Bitcoin, 11 cents 10-year back to $50,000, whether it's going to further rise or it will crash, nobody knows. Number one. Number two, if you do not understand about the equity market, mutual fund, insurance, commodity, currency, derivatives, please do not take exposure in crypto market because crypto is the BOP of all, right? It's only right now speculations going on. However, some investors, if you say I'm long-term investor, I can hold for the next 20 years, 10 years like that. How many people are able to hold their equity for the 10 years and above? Think about that. How many people are
Yeah,
run their SIP for 10 years? So when we are the trader on this investment asset class, so on the crypto side is totally price speculation. When we talk about the equity, 10% people generate the profit, 90% lose the money. On the derivative side, hardly 5%. And on the crypto side, only 1% will be able to generate money. 90%, 99 is going to lose. So if you want to ride with this rally, again, there is no problem. Keep your stop loss. Understand one thing. This market is 24/7, 36, 365 in a day. There is no holiday in crypto market. Unlike in equity market, which is a well regulated under SEBI. We have 6 stock exchanges in equity and commodity, and 5,000 listed stocks. 5,000. But in the crypto market, 11,000 cryptocurrencies. One is the Bitcoin, and remaining 11,000 belong to the alternate coins. All are not under any government or any regulatory agency. They find decentralized, most of them. 11,000 compared to the 5,000 stocks. Now within the 5,000, only 10% belong to the investable corpus. 90% is not going to create wealth despite having the SEBI, right? And SEBI is very, very powerful. On the crypto side, 11,000 is alternate coins. And how many exchanges? 300 plus exchanges without any regulation. So how many is going to burst over a period of time? Nobody knows. So if you want to invest, always put your 1%, 2%, only if you are financially literate, and go with the top 10, maximum 20 as per the market cap in a crypto coins. I hope I got the
yes,
answer.
sir.
Yeah. Yes, sir. Thank you so much, sir.
Good evening, sir. Good evening. Am I audible? I'm Dr. Joshi, sir.
Yeah, go ahead.
Yeah, sir. As we know that this equity market is going to boom a lot in the coming years, but time and again we have seen that, right? Beginning from the Arshad Mehta, before that SEBI, Arshad Mehta, then Tenali, the Tilgi, and all this, and recently in 2002, when we got a big scam of Carve, almost all about 3,000 crores, and the investors, this their faith has been breached a lot. So what we can do in India, because equity market again and time and again it shows that it is always subject to market risk, and that market risk comes from the breaching of this our pledges and our contracts. So how can we overcome this? How can this market can be a foolproof? Even today we don't have that system. So it is again a trust breaching is over there. So I would like to have some your words on this 3000 scam of Carvey which he has done, which is a well-known company, a well-known stockbroker of India, sir.
Well, that's right. Ki we have seen lot many crashes in the market. In fact, in 1992, since Harshad Mehta time, although I was not in participant that time, but since 2000, and I started in 1999, the market went to the from 3000 to 6000, then immediately crashed, and it's from 6000 to the 2800 level in a 1 year. So this was my first experience, and thereafter I seen lot many crashes, bull and bear. So this all crashes, bull rally, bear rally, scams is a part and parcel of the market. You can't totally avoid. That's why I said it's subject to the market risk. You can never ever avoid this kind because it's not in our control. How can you understand the moral that company who are listed, how they are investor friendly? We can hardly can't know their intention behind that. So it's all about how long we can invest in a good script which are wealth generator. Now, as I said, only 10% belong to the wealth generator, 90% wealth destroyer. So we should know the how to identify that companies. Otherwise, stick with the mutual fund route. Number one, increase your time horizon. Do not go with the lump sum way. Always go in the SIP way. There's only one way you can curb the volatility. And despite all this fact, the market is crashing, but there is a huge money generated over a period of time. So when I take of course, the past history is nothing to do with the future. But if I take the example of mutual fund, which are launched by the Reliance Growth Fund, if you got into mutual fund, you might be knowing the NAV was 10 rupees, Reliance Growth Fund. The NAV currently is 2000. Right. Again, it's not advisable or recommended. I'm giving this, whatever the script I talked about is only for the training purpose. So this scam will always be there. You can't hide or you can't avoid, despite the SEBI is more powerful than what it was previously. What you can do is invest in a staggered manner before that. Before taking a equity exposure directly or indirectly, always look at your risk profiling. How much risk you are able to take. So for that, there is a risk profiling. I have skipped that 8-step procedure because of the time constraint. There is a fourth one is a risk profiling. So what this says, how much risk you are willing to take. So accordingly, you decide whether you are conservative investor, moderate investor, aggressive investor, very, very aggressive investor, and keep your allocation according to your nature, whether 10%, 20%, 50%, 90%. So throughout the, I'm very aggressive in as far as the equity. I'm not in direct equity. I'm the mutual fund. It doesn't mean you also follow that. Most of the time, I had been more than 95% in the equity. But this is the first time I booked some profit. I'm 85% in equity. So because I'm through the last 2 decades, it doesn't matter to me. Of course, it's give the pain when the market correct, right? But always try to balance your asset allocation. So suppose you invested with for example, gold, some portion gold, some portion debt, some portion equity. So you give some allocation, for example, 33, 33, 33, right? This can vary as per your age, your requirement, your objective, your risk tolerance. It's 30, 30, you're given an equal proportion over a period of time, next 1 year, it will not remain same. So 33 will go to the 50%, another 33 will go to the 25%. Now there you have to rebalance, right? So book the profit which has performed well and put in which is underperformer. So this is one way to rebalance, and majority of people do not do this. because it's a job of the advisor, your financial advisor. You can search who can help you to rebalance your portfolio. But you cannot ignore equity altogether. Despite all the scam and all the crashes happened, despite all the calamities and instability in the political front, market performing. So never ever ignore the equity. Just learn how to manage the equity. That's more important.
Okay, sir.
I hope I answered you.
Yeah, sir. But my question was that the reach of that Karvi system, which has taken 3,000 crore rupees, a moratorium is there from the SEBI side. What the investor will do, sir, for that? Because they have breached the faith of the investors by pulling their securities. Once the investors placed for them, they have pulled down their securities to the whatever where they wanted to invest. So how can an investor, means how the country will be going to overcome such types of breaches? Because in developed market like UK and USA, we don't overcome or we don't see such types of frauds done by the depositors or by the market participants. So what can you suggest for that, sir? Should we have an account with the demat account with the banking system, banking companies which are providing this, so that at least they are not going to do such types of things on behalf of the investors?
No, understand one thing. If you opened account with the Carvi demat account, so Carvi cannot run with your demat account, because whenever we opened any demat, whether with some brokers or Carvi or any bank or financial institute, demat is always go with the NSDL or CDSL. These are only two authority. NSDL belong to the NSC, CDSL belong to the BSC. So your holding is parked with the either NSDL. Just check whether you have opened your demat with the NSDL or CDSL. So Carvi is not the ultimate holder of your demat. Even as Carvi defaulted, but all the equity which the Carvi was having is lying with this absolutely safe. There's nothing wrong in that. And about that, if someone's due to some chance, if this demat, now there is a SEBI guidelines, the moment you purchase any equity, it has to be, the moment you make the payment within 2 days, it has to be immediately transferred to your demat account. It will not lie in a pool account of that sub broker or any intermediary. Somehow, if this stocks is remain with the Carvi, there is an investor protection fund by the SEBI, and it will always be being paid by the SEBI through this investor. So your all demat is intact, all holdings is intact, despite any broker or any bank or any institute get default, you are absolutely safe.
Good evening, sir. Myself, Dr. Mehta from Ujjain.
Yes.
It's been wonderful talk from your end, and I think we have been highly enlightened by your new insights. I have put one question already on the chat box, but due to some other questions, my question was not taken.
Sir, I'm not able to see a chat box. Please
Yes.
repeat it.
I'm repeating my question again for your kind information. That when we compare gold market with real estate markets, as an expert, how do you view it, and what is your best advice to new generation of the investors when we compare gold vis-a-vis real estate market? Thank you so much.
Sir, gold and real estate is altogether different asset class. You can't be bored only with the one. Both are important, right? Real estate, and when you talk about the home, our own personal home, one home is always important. There should be always one roof above our head. So it's always, and gold, because again, gold is a international asset class. And if you see the last 40 years return, and when we put on the risk return chart, equity is the highest, 17% return generated by the Sensex. Next comes the real estate, 11%. Next comes the gold, which is a 10%, right? Or 9%, you can say. So as far as gold is concerned, your portfolio holding should not be more than 15%. 5% to 15% should be there. And we, being an Indian, we are always attached to the gold, especially women's, right? So there is a 5-6 ways of buying the gold. You can also search that. Better rather than purchasing the jewelry, you can go with the paper form of the gold. So there is not at all any comparison between the real estate. Real estate is also important as well as gold, right? Now, how much allocation you should have in real estate? Again, your affordability, how much EMI you are going to pay, and most the new generation, they like to be free from this kind of the liability. So they do not want to be, again, there is a personal choice. They want to be set up overseas. So they do not want to be in a real estate side. So what can they do? They better to be on gold, debt, and equity. Of course, those who want to stay in India, the real estate, you cannot ignore real estate altogether. So there should be always balancing between all different asset classes. I hope I answered you.
I think
Dr. Mehta,
ईडी सीबीआई के चक्कर में गया है क्या बोल नहीं पा रहा है.
thank you, sir. I think that was a great answer. And Nidhi Yadav, you've raised your hand. Would you like to ask something, or is this by mistake? You can unmute if you want to ask anything. Jagdish Kumawat has also raised his hand. For the participants asking for feedback form, you need to attend the complete session, which is still remaining. So I'll be posting the feedback form. If there are any more questions, you can ask them now. So there is one in the chat box. It is said, how can we guide children how to, make them aware about financial planning in a very simple way?
That's very, very important. Unfortunately, we do not have financial literacy at the school level. You understand one thing, by the age of 7 years, our entire brain get fully developed. 7 years is that child get, as far as brain is concerned, he get full maturity. And it's very important for us to teach them about the all money matters. And now, first thing, we are also not aware how to, because we are also not, most of them are not financially educated or financially literate. What you can do is, SEBI has launched a pocket money program. You can visit to the website, or you can find out the Google pocket money program. Start teaching with the piggy bank, and this is very common since our childhood. And this habits should be cultivated since beginning. When I was child, everyone keep piggy bank. Nowadays, I don't see. In fact, my daughter never maintained piggy bank. But when I was child, I used to keep coin every month, whatever I was getting, and over a time I was getting a lump sum. So, what you can do is start SIP in the name of the minor, and show them that this you can start SIP with even 100 rupees, right? Unless child will not understand what is the value of money, but this is how you can start showing over a period of time. They gradually understand. So whatever the pocket money you give, always ask them to save, and some portion they should spend. So this is how you can go with them. And for more detail, you can always SEBI and NSE launch with their lot many programs for the children. You can refer to that. But it's very important for the children to understand all this money concept.
Yes, sir. True, sir. Thank you, sir, for patiently answering to questions and your immense knowledge showing through also. I now request Mr. Shantam Sharma. He is a member of Managing Committee, ISTD Indore chapter, and Head of HR, MPCG Mobile Private Limited, Indore. I invite him to propose words of thanks.
Good evening, one and all. I hope today all the participants got an opportunity to enrich themselves in this wonderful session. I will say informative and eye-opener session, and conducted by Mr. Sandeep Tahilramaney, sir, on investment trend during COVID-19 pandemic. On behalf of ISTD Indore chapter, I would like to express my heartiest thanks to Sandeep, sir. I would also like to express my thanks to Dr. Upinder Thur, former National President ISTD, Honorable Vice Chancellor Shri Vaishnav Vidyapeeth, Vishwavidyalaya Indore, who continuously inspire and motivate us for organizing such lectures on regular basis. I would also like to thank Dr. Santosh Thur Madam, a National Council member from ISTD Indore Chapter and Dean Research, Shri Vaishnav Vidyapeeth Vishwavidyalaya Indore, for guiding us. I would like to thank Dr. George Thomas, Chairperson, ISTD Indore Chapter, and Director, Shri Vaishnav Institute of Management, Indore, and Dr. Rajiv Shukla, Vice Chairperson and Director, Shri Vaishnav School of Management, SVV Indore. Without their active and able leadership, it would not be possible for us to execute this event in such a smooth manner. Special thanks to the energetic committee of ISTD Indore chapter for continuous and active support, which was much needed for the smooth conduct of such type of programs. Last but not the least, I am thankful to all the participants for showing their interest and active participation. Thanks, and have a great evening ahead. Thank you very much.
Thank you, sir. To the participants, I request you to fill the feedback form. It's there in the chat box now.
Thank you very much. It's my pleasure to be here. I hope you enjoyed this session, and I'm blessed to be part of your community. Thank you.
It's our pleasure entirely, sir. Thank you so much, sir.